The Indian government is planning to establish its first sovereign wealth fund with an initial corpus of 50 lakh crore rupees. But before knowing how the government is going to arrange this huge amount, let us first understand what exactly are these sovereign funds. A sovereign wealth fund is a state-owned investment fund managed by a government, typically using surplus revenue from a country's exports or reserves. This money is then invested into various assets like stocks, bonds, and real estate. Generally, the objective behind creating these sovereign funds is to generate economic benefits for the citizens and stabilizing the economy during economic fluctuations. A sovereign fund essentially acts as a rainy day fund for a nation. So how will India accumulate 50 lakh crore rupees for its sovereign wealth fund? The Union government is planning to pool its shares in listed public sector companies. The sovereign wealth fund will sell new and existing shares, receive dividends, raise money from strategic investors, and borrow against its shares to raise capital for its investment corpus. The government will transfer its shares in listed PSUs as well as the specified undertaking of the Unit Trust of India, which is SUUTI, to this fund. Government-owned SUUTI holds shares in various private listed companies as well. It is thus estimated that these listed PSUs can provide the fund an initial corpus of 50 lakh crore rupees. The government owns over 51% of 48 publicly traded companies, and this stake will be transferred to this new fund. The sovereign fund will invest this money in India and abroad. But why does India need a sovereign wealth fund? Even as wealth funds have been there in smaller sizes in India, with this plan, the government is scaling it up to a bigger level. About 40 countries have their own sovereign wealth funds, including large economies like China, the US, and Russia, as well as smaller ones like Pakistan, Indonesia, and Malaysia. Some of the more well-known names include Norway's Government Pension Fund Global, Singapore's Temasek, Abu Dhabi Investment Authority, Qatar Investment Authority, and Mubadala Investment Company. The central government's plan is to create a sovereign fund run by professionals on the lines of Singapore's Temasek and GIC. These two sovereign funds are well known for helping prestigious corporations like Singapore International Airlines and making aggressive investments abroad. Countries like China and the US, which have multiple sovereign wealth funds, use them to acquire critical assets and building infrastructure in several countries.